Hello, everyone. Welcome to Diamond's Edge. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week, I'm going to show you why you should be very concerned about stocks topping out, the process of stocks topping out right now. So let's jump into it. All right, here is a chart of the SPY, the Spider S&P 500, which very closely tracks the S&P 500. And what I have here is a series of numbers that represent Elliott wave. Now, for those of you who are not familiar, Elliott wave gives you a roadmap of how to interpret price data on a chart. It's a series of 5 waves and 3 waves. If you want to learn more about that, I obviously highly recommend that you subscribe to 10 Stock Trader. But even if you're on your own, the famous book for technical analysts anyway, Robert Precher, Elliott Wave Principle, does a deep dive into exactly what Elliott wave means, what to look for, how to trade it. But one of the things that I love about it is it helps you manage your risk. It increases the probabilities of where you're right and where you're wrong. And in this game of trading and investing, we are all right and all wrong all the time. So it's a matter of risk management. And Elliott wave helps you manage that risk, which is why I love it so much. Okay, so starting from the bottom here in October of 2023, I have the big blue numbers are the bigger counts, so 1, 2, and then I've subdivided all these out. Without getting into too much detail, you can kind of see here in this blue line what I'm expecting. Now, this is one scenario, possibly 2 or 3, but the overall outlook remains the same. Whether or not, a few wiggles here or there are going to be, a little bit different, and that's fine. That's not what I'm not looking to capture every single little top and bottom. The overall picture is what I want to trade. Okay, so as you can see here, heading into this week and then next week, what I'm looking for is the topping out process to begin, to start, which means an end to the rally. And then as you can see, this is probably the minimum drop here into, let's call it late February, possibly early March. Then we get another rally, okay, into this 5th wave high. So 1, 2, 3, 4, 5, and then the even bigger drop, call it late spring, early summer. Now, is it possible that this marks a top and then, we don't get this bottom and rally? Absolutely. Again, the key here is that this is topping out, and this is a more conservative approach to what I am looking at, all right? Let's look at something else too. So aside from just price, let's take a look at the bottom here, okay? And I'm going to show you this in real time here, all right? Look how this is the RSI, okay? I'll make this bigger so you can see it a little bit better. This is starting to top out, okay? So this is making a lower high while price is making a higher high. So if we combine these 2 points, and I can track this right here for you, okay? So if we can combine this high in price, and then we had the high last week, okay, look what the RSI is doing. It's not making it. That's called negative divergence. It's a warning, all right? We can do the same thing on the bottom. This is a composite index, which I like to use in conjunction with the RSI, another momentum indicator that I highly recommend to use. And it's doing the same thing. It's not keeping up with these new highs in price. So you have price coming into what appears to be either a top of a wave 3, possibly a top of the wave 5, with a correction unfolding if we follow the rules of Elliott wave. We can also combine that with negative divergence on both the RSI and the composite index at the bottom. So this has price and the indicators of a warning. Well, what else can we use? Subscribers for 10 Stock Trader know that I often talk about WE-GAN and time factors, time analysis into how we trade. And time is very important because without timing, you're not gonna trade very successfully. So I call it the 3 tenets of technical analysis. There's price, which is Elliott wave, which I've outlined here, time, which I'm going to get into in a second, and then the indicators, which we've seen below. All right, I've already covered price. We know that the Elliott wave is likely topping out. And then we've covered the indicators. We're seeing negative divergence. Well, what about time? We have to factor in what time factors matter. And where do you get time factors from? That comes from history. So I've marked this next week into February 14th. That could be, and again, this blue line could be something like this, where the high is this week, and then next week marks a lower high. That's fine. I'm not too worried about it. I'm not day trading this. This is more of a 2-week 4-week, maybe 6-week type of trade that I'm looking for. So that gets us to February 14th, and then what kind of low will we get again into the end of February, possibly the beginning of March, and then we have another time factor coming up into springtime, March 21st to even call it into April Fools. So those are the specific things that I'm looking at in terms of what am I expecting in the market, and what does this actually mean? Simply put, it means volatility. And when I see volatility as an options trader, a 10 stock trader service, that for us, that means opportunity. And that's what I'm excited about in terms of being able to take advantage of this opportunity, looking at price, looking at the indicators, and looking at time. All right, so again, expecting a topping out process here in the stock market over the next week or two. Be prepared for that. I'll see you next week. Thank you very much.